Yeah. Well, for the time being, the Nifty is off the blocks in style. We were indicating an 80, 90-point uptake. Well, it's up close to around 100 points, and we're holding on to those gains. So that's quite encouraging. The Nifty Bank as well is making a bit of a move. Let's see whether or not the Nifty Bank can move towards the 50 DMA. That's around 300 points away from current levels. The Nifty has already conquered the 20, the 100, and the 50 DMA. So good time then to get chatting with another management. Well, it was a decent quarter coming in for Endurance Technologies. As the company reported revenue growth of close to 11% in comparison to last year. The company has also managed to expand margins a little bit. And, we want to understand how much of this is sustainable. Well, to understand that, we're joined by Mr. Ramesh Gehaney, the ED and CEO at the company. Good morning, Mr. Gehaney. Thanks so much for joining in. Well, good to see a bit of an improvement in terms of margins. But let's focus on the smaller part of the business. That's the European part of the business. So 25% of your revenues comes in from there. And after, I think, 5 to around 6 quarters, if I'm not mistaken, we have seen that margins have expanded from around that 8.5%. It's moved to around 12.5%. Now, part of that is because of lower energy cost as well as compensation coming in from governments as well as clients. Do you believe that this margin recovery in Europe is sustainable? And what's the guidance, particularly for the European business? Go ahead, sir.
Yeah, good morning. First of all, I'd like to tell you that the market dynamics will continue to play on the business. Even if the energy costs are coming down, the dynamics are a bit different. And how well do you perform in that is totally dependent on the kind of strategies you take around with your business under these dynamic conditions. For example, now, even if electricity cost is coming down, gas prices are coming down, and large part, let's say 50% of the energy cost and gas prices have been indexed by the OEMs. This is a positive sign. But the volumes are still a bit subdued as the new car registrations is down by approximately 1.9% compared to the previous years. But the positive side is that the new car registrations, although being down, but the stocks at the dealers level has reduced from 3.2 million vehicles to just about 1.2 million vehicles. So which is a sign that probably the numbers can get better. And as such, we've already seen, a lot of downside, approximately 20% or 23% with respect to FY19. I don't think it's going to go any further down. Here onwards, you can only see things better happening.
Mr. Gehaney, good morning. Can you give us some more color on the domestic business, the India business? And I'm talking specifically two-wheelers because that's the lion's share of your business, right? I think almost 60% of revenue. And we know that two-wheeler sales have been pretty sluggish last few months. What are you hearing from OEMs now? What is your own outlook on your two-wheeler business?
See, there are 2-3 points attached to this. One is that Q3 is generally a weak quarter because it relates to the year end. Secondly, the export market is quite down. It's been heavily hit by approximately 25% across the industry. And if you look into the total numbers, around 12 million vehicles have been made so far, out of which 2.9 million vehicles are for exports. Now that itself is down by some around 25%. So the export market is bringing the volumes down, which is impacting the total overall outlook of the business. But as things move forward, people are very optimistic. They're hoping that as the geopolitical environment improves, the numbers would come back in exports. And it is said that Q1 of next year is likely to be much better if compared to the current and last quarter.
Yeah, no, absolutely. And, the overseas outlook is much better, at least. I mean, the macro, how it feeds into the consumer level is a different question. But, I mean, in the US, it's looking good. As data tells us, Europe, they themselves are now saying there is no recession or anything of that sort. So in that light, I mean, if this does feed through, what's your sense? What can it do for your sales? If you can give us some outlook for FY24, and in terms of margins as well, what will this mean? What kind of trend margin should we expect going forward?
Okay, let me put it in a different way. As far as margins are concerned, metal prices and metal prices and commodity prices had some impact on that. Energy prices had an impact on the margins, which is now improving. If I look into my current European margins, they're approximately 14.4%. Now, and this corresponds to somewhere around 16.2% when I remove the metal price indexing from it. which is fairly, it's fairly upwards as compared to the previous years. Now, previous quarters, I'm sorry. So, as we move forward, we can only look at an optimistic side of it as things will improve, because everybody's looking at the numbers which are moving upwards in sense of EV vehicles are going up and hybrid vehicles are going up, and that's where everybody's looking at of getting higher numbers and improving the business outlook.
Okay. All right, Mr. Gehaney, you're sounding a little bit optimistic, so that's good to hear. Let's understand more then, since you just touched upon EV. Could you tell us what is the quantum of order wins from the, from the EV space? What's your EV order book? And also as a percentage of revenues, how much can EV contribute, say, by 2025?
Okay, I would not like to give any forward-looking numbers. That's something we generally don't do. But I can tell you one thing. We've won close to 600 crores of business in India, and 140 million euro business acquired overseas, out of which 70% is for EV and hybrid vehicles. So I think our acquisitions towards EV vehicles is pretty sharp and good. And I see that everything from here onwards is going to be increasing, because for the simple reason that the kind of product configurations that we have, they're very much EV agnostic, and acquiring more businesses from these players is not that difficult right now, because we were a bit of late starter, but we are getting high onto pace with all these key players.
Just to understand, Mr. Gehaney, how do margins compare in the EV business versus the non-EV or the regular ICE engine business?
I would not like to comment on that, because the configuration of the vehicles are different. If I say EVs are better or ICEs are better, it would be an improper comparison, because the configurations of the vehicles are different and the configuration of the product is different.
Which is why I was just trying to understand, purely in terms of margin profile, I mean, whether EV is a higher margin business for you, exactly for the reasons that you mentioned, that they're very different products.
Well, they're comparable, right? If they're a notch better than IC engines, it's because, the kind of value add that comes in-house, where you've got to do a lot of value-added portion in-house. That's why probably the margins can look better in EV segments, but they're comparable otherwise.
All right. Sorry, just to clarify those numbers once. So you said on the EV side, you've taken in orders worth 140 million euros, and 70% is EVs. Is that what you said?
Yes, that's in
so
Europe.
$100 million is euros. This is unexecuted EV work that you have outside India.
Exactly.
And in India, 600 crores is the total orders that EV orders that you have that you're working on, right?
Yes, already acquired. Business already acquired.
Got that.
Okay. All right. Mr. Gehaney, I want to understand another aspect. If you could tell us the ABS market size by volumes, and how much has Endurance Tech in terms of capacity on the ABS side of things, and you're looking to add some capacity, I think, out there. So what will the number go to?
Yes. See, as per our calculation, approximately 3.6 million vehicles would be ABS configured. We have got a capacity of 400,000 in a year, which we are increasing, and that's for the single channel ABS. We are increasing that rather say we are adding a twin channel configuration also, for which a capacity of approximately 200,000 per year is getting added. Current run rate is close to 400,000, which was the original capacity setup.
So your capacity will be going to 600,000?
Yes.
Okay, so effectively you would be close to nearly around close to around 18 to 20% of the market.
Yeah, initially yes, and we've got better plans. See, let's try to understand that we have already supplied more than 250,000 ABS modulators in the market, and they're all defect-free, zero defect. So that gives us a very positive edge over, and it wins confidence of our customers. And we being probably the only Indian supplier over here to supply ABS, as compared to the multinationals like Bosch and Contis.
Okay, got that, Mr. Gehaney. We will leave it on that note for today. Thanks very much for joining in and giving us some more details on the business at the end of the third quarter. Markets holding up in fine form, 105 up on the Nifty, and a lot of mid-cap stocks are also beginning to make a move. In the large caps, obviously, ONGC and Tech Mahindra. ONGC on the windfall tax, that's the big one worth noting. That's the big mover on the Nifty. Well, on that note, we do have to take a very quick break. On the other side, more earnings conversations lined up for you. We'll be chatting with Rupwant Singh of GMDC, talk about their third quarter numbers, and then we get chatting with